just after 12 noon in Honolulu, 5 o'clock in New York. It is Tuesday, December the 10th, 2019, and this is the Daily Report for Gold and Silver. There are multiple events that have been affecting the market, one of which is the FOMC meeting, which began today and will conclude tomorrow, although it is highly anticipated that the Federal Reserve will announce no change to interest rates. The wild card remains the 15th of December because mixed messages are now coming out of the White House as to whether or not they are going to implement the new tariffs or delay the new tariffs. There have been conflicting statements over the last couple of days that really put the end result in the uncertainty category, and that, of course, was bullish for the precious metals and bearish for U.S. equities. Let's take a look at our current price board as well as talk about our current trade. It was fundamental events today that really ramped up the uncertainty factor in regards to whether or not we'll see tariffs delayed or rolled out or rolled back on Sunday, December the 15th. We saw gold and silver both move higher, with platinum really being the star of the precious metals today. As you can see, gold is currently up by $3.80, about a 0.25% rise at $1468.70. Silver also had nice gains on the day, a little bit over 0.4%, a gain of 7 cents at $1671.50. Palladium is running closer and closer to $1,900 per ounce as it tracks yet to another all-time new record high. That's been happening really on a daily basis for the last couple of weeks. And lastly, platinum really took off today. If you take a look at the weekly chart, I've got that here on the right. It's amazing to see the kind of move we've witnessed this week in platinum, now well over $900 per ounce at $924.10, and that was all with some aided tailwinds from the dollar index, which did close lower, down about 15 points at 97.46. Let's take a look at our technical studies. Renewed concern about whether or not President Trump will roll out new tariffs on Sunday sent equities lower and the precious metals higher. What we can see when we take a look at this daily candlestick chart is, first and foremost, there seems to be a continuation of solid support right at approximately the 1460 level. We haven't seen it breach into that area for at least a week, and that would be down here, was the last time we saw that. And with tomorrow's Fed decision coming out and the likelihood remaining that the Federal Reserve will continue to keep interest rates where they are, I would expect that to be neutral to bullish for gold. The wild card is certainly Sunday's announcement as to what the administration is going to do in regards to the deadline that comes up on that date. Because whether or not Trump sustains or delays that is the real question. And I ask you to ponder, if he does delay that, what's the real motive behind that? Nonetheless, I believe we could see a real nice bullish spike towards Sunday and Monday of next week, because my belief currently is that they will announce that they are delaying the tariffs rather than implementing or canceling the additional new tariffs. Now, we have some real support, as I said, at 1460, but we also have some real resistance at about 1481.60. And to see that best, we need to pull up a weekly chart. And traders, what I have put on the screen is a weekly chart of the continuous contract of gold futures. It contains a couple of different Fibonacci retracement sets. What the additional retracement set contains is it starts at 1920, the record top in mid-2011, and takes it down to the conclusion of that at 1043 at the end of 2015, beginning of 2015. When we look at it that way, we are deeply entrenched in a fifth wave right now in terms of a major count, with the end result that this predicts at about 2100. Of course, our shorter term retracement set contains the last rally, the large rally this year, which begins at 1269 up to 1566. Now, what I want to draw your attention to, most importantly, is the 50% retracement from the long data set. That comes in at roughly 1481. So to me, we could see resistance here as much as the numbers of 1497, and that, of course, is the 0.23 or 23% retracement of this shorter data set. Nonetheless, it tells me that we could certainly see higher prices going into next year and a real rally if things really break down in terms of the current negotiations between China and the United States, especially if Trump stays true to his word and delays any signatures, including phase one, till after the 2020 elections. And that, to me, is the wild card. Therefore, my recommendation is to maintain your current long position, maintain your current stop. Although it hasn't really even gone into the area, we moved it to 49. We've maintained above this particular price point. And of course, that is good for our current trade. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.